So if you spent any amount of time on YouTube, you've likely heard business credit is the key to funding. Build business credit, get trade lines, get that PAYDEX score up, and get approved. After 15 years in banking, much of which as a small business banker, I can tell you that's not how banks make their lending decisions in most cases. Business credit matters, but at the end of the day, banks are assessing several other factors that supersede business credit. And I want to break down what those factors are so you can have a better understanding of how to position your business and what to focus on to get the best approvals fastest. So let's talk about the first talking point in this, all right? And for those of you who are new, welcome to the invitation where I'm going to be your business banker and your capital strategist from here on out. So the number one point that I have is business credit is a tool, not a golden ticket, all right? It's a tool, not a golden ticket. So it helps you establish credibility, helps with certain lenders, it does, and helps with vendor relationships, more importantly, but it does not automatically create bankability. Very important distinction right out of the gate. Business credit leans more towards vendor-related trade lines than it does cash-related lending products, okay? So if you want to, get equipment or tools or resources from another business in a business-to-business transaction, and you want them to invoice you 30, 60, 90 days down the line and basically front you those resources, your business credibility will be pulled and likely leaned against in that transaction. You walk into a bank to get a line of credit, to get a term loan, equipment financing, your business credit score will not be the top decision that determines that. And it can be as polished if it wants to be, but the next factors I'm going to teach you in this video, if they are not met, you will almost certainly get denied. So pay attention. So number two is going to be cash flow usually matters more, significantly more. So banks often ask, can this business repay the debt? Not, does this business have an 80 PAYDEX score? Very important. I understand business credit was kind of an anomaly. It was something different at one point in time that was broken into the space by a few, original content creators that brought it in, and it was new on most of our radars. And it's picked up a lot of steam because they had a lot of success. And naturally, content creators who are usually there for viewership and other monetary reasons are not there keeping up with the actual basis of the problem. Okay, so business credit caught a lot of traction because some people put it out there, introduced a lot of people to it. It got a lot of attention, did great for YouTube channels and Instagrams, and it's been working. So you have a plethora of other finance creators harping from the rooftop that business credit is essential. And it's not all the time, okay? So examples of what banks are focused on outside of an 80 PAYDEX score: deposit activity, revenue consistency, average balances. We're just talking about cash flow. We haven't even gotten to the other points yet. Point number three, time in business matters significantly. You have lenders that care about 6-month times in business, 12 months in business, 24 months before considering approval. These are baseline thresholds that you have to reach. I don't give a damn what you get your PAYDEX score to in the first 60 to 90 days. They're not going to want to talk to you. You need to have so much established time in business and financials to match. Strong business credit won't overcome a brand new business in this situation most of the time. Number four, personal credit still matters significantly. We're going to do other videos on this, but for now, it's important for you to understand it matters, all right? This is going to surprise a lot of people. If you're a startup, a small business, or closely held business, your personal credit will absolutely be assessed, and it will matter, and it can torpedo a lending deal for sure. Many approvals are still heavily influenced by owners' personal profile, okay? Number five, relationship history matters. Some institutions, if you're not banking specifically with them for 1 to 2 years, they don't care what other financials you can provide. They're not interested in lending to you. This is a real thing. So this cannot be overstated. Existing deposit relationships, existing borrowing relationships, existing account behavior, all being assessed, and in some cases can all beat out where your business credit stands. So here's a list of products or examples of products that don't often require strong business credit. It matters, it can help, it can hurt, but it is not the deal maker, okay? So SBA loans, many lenders focus heavily more on personal credit when it comes to SBA loans, cash flow management experience, than business credit. Those 3 bullet points supersede business credit, okay? Startup financing is another example. Often relies on owner credit, revenue, industry, and guarantee. Again, over business credit. Merchant cash advance, not necessarily recommending it, but it works in some cases. There's a place for it. Business credit often isn't a primary factor or assessed at all when it comes to merchant cash advance. Revenue-based financing. Many fintech lenders care about deposits, sales volumes, and revenue consistency. A lot of these fintechs are designed to help get around some of those more fundamental underwriting barriers. Business credit is one of them. So they're intentionally in the marketplace to get you around or over the hump of business credit, at least until you become fully bankable and build that credibility up. Business credit cards. This is a big one because business credit card is actually what a lot of content creators mean when they talk about business funding. You will get under the weeds or get under the hood and find out all they're talking about is stacking business credit cards. They're not usually talking about actual lines of credit, term loans, and other usable forms of cash. So this one's popular. If you're a brand new business, especially, they're relying on personal guarantee, personal credit, if the entity is structured relatively well, projected or existing revenues. All of these things will supersede business credit. I literally help clients get approved same day of account opening for business credit cards at the institution I work for. And they don't have, the business is days to weeks old because their personal credit's good, strong guarantee, good personal credit profile, projections for revenues are high, and the business is set up relatively well with its basic demographic info, okay? So business credit is important. Don't get me wrong. This is not a badge or to tell you to completely disregard it. But I do want to dismiss the misconception that is vital for business lending. And if you've been getting declined and thinking that business credit is the problem, I need to demystify that for you. But it's only one piece of the puzzle, okay? The businesses that get approved consistently understand how lenders evaluate risk from multiple angles. This is why this channel is not about chasing funding hacks. You are going to get genuine bank level quality information about how to get approved for funding, various forms of funding. You will find out on this channel, we're going to cover as many of the 4,000 plus institutions in this country that are legitimate on this channel, because I want you to understand all of your options and how to access them. So it's about helping entrepreneurs become bankable, because that's the foundation of becoming lendable, okay? This is going to be very important. I need you to comment bankable down in the comment section down below and let me know you tied in all the way through this short but powerful video. Comment bankable down below. Business credit is great. It is a value add in most lending decisions. It is not the deal breaker or the deal maker in most lending decisions. And for me to understand it, you understand that, drop bankable in the comment section down below. Welcome to the invitation. I'm going to be your banker and your capital strategist going forward. I have 15 years in banking and financial services industry, and I manage an existing clientele book at an actual financial institution, small businesses and entrepreneurs and freelancers, 7 to 8 figures in deposit relationships and lending requests. I also have a mortgage license. You can look up my information in the About section. My NMLS is going to be 771386. I have a life insurance license, FINRA investment license. I have been all over banking and financial services, but I specialize when it comes to business banking and business lending. So you are in the right place if you're looking to position yourself for maximum bankability and maximum lendability. Get in the description section, in the About section. I know the channel is new. Get in the description in our About section down below to learn more about me, what I have to offer. And you can get a copy of my book in the description section down below, which this channel is named after. I went as far as actually writing a book on this topic. So if you really want to get tied in on how to position yourself, stay subscribed to this channel, like, comment, share, subscribe. Get tuned in with what I have to offer, my background. My book is in the description down below. And you can learn more about what you're going to learn and the value you're going to get from this channel. Other than that, welcome to the invitation. I want each and every one of you to stay focused, stay in motion, and I'll see y'all soon.